Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or +2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is May 30, 2024, Thursday, option expiry for Nifty. So first we will discuss the levels, then the power of technical analysis. So first and foremost, the levels we'll give, then we go into the discussion part of it. Nifty, it closed at 21,597.30, 0.11% up. 0.11% down, sorry, my apologies. It's slightly down. BankNifty 48,682.35, 0.37% up. Nifty, on the other hand, Nifty closed at 22,488.65, 0.95%, almost 1% down. So Nifty, before first we'll see Nifty, BankNifty, then power of technical analysis, then Nifty discussion. Nifty and BankNifty both opened a gap down. Nifty formed a inverted hammer but held the 20-day exponential moving average and the Bollinger Middle Band. So it opened in between both the 20-day Bollinger Middle Band and the 20-day exponential moving average, below which was the 20-day Bollinger Middle Band, and it managed to close above both. So in the process, it formed a big shooting star, an inverted hammer type kind of a candle. Normally, this is kind of a reversal candle because there has been a significant downtrend that has started last 2 days. Hence, one can think as at least the selling is arrested, if not a reversal. But we have to see how it closes tomorrow. Tomorrow being a month end, so hence it is very, very important. BankNifty, on the other hand, more or less opened the same thing, opened right at the 20-day simple moving average, which is nothing but the Bollinger Middle Band, and formed a solid big green candle, and it formed a kind of a piercing pattern type candle with a big upper wick. So basically, it tells that the selling is at least looks like it is getting arrested, because the Bollinger Middle Band will act as a support or resistance, which I have explained many times. Right? Nifty, on the other hand, it opened a gap down and formed a solid big red candle, and it just closed slightly above the Bollinger Middle Band. Of course, it closed below the 20-day exponential moving average. So below which is the 50-day simple moving average and the exponential moving average. Now let's come to the power of technical analysis. So what is the level we had said? On the upward side, let's leave it because it never went there. Hence, let's not even bother about it. We had said that Nifty, the support good support is at the 20-day, 50-day exponential moving average and the simple moving average, which both are more or less around the 22, 384 and 381 levels. You can see the power of technical analysis. That's what is very important. So today is an important day. Why? Because normally we see convergence in Indian markets because all indices goes up or all indices go sideways or everything goes down. Today what happened? Bank Nifty went up. In fact, it was the best performing indices today, while Nifty was the worst performing indices today. So such a divergence is very rare and a lovely sight to see, because traders like me, we enjoy such a divergence rather than a one-sided move. This is a delight to watch. So that is what had happened. So Nifty formed though it formed a solid big red candle today, and though Bank Nifty formed a green candle, the real thing one has to see is how it closes the month end, which is tomorrow. In all likelihood, Nifty is going to form doji. It opened today, it closed at 22,488. I think 22,567 it opened the month. So I expect the closure can be somewhere around that, forming a perfect doji. But it is not a cause for happiness or something one to cheer about. The reason is very simple. Last month also it formed a doji. This month also if it forms doji. Doji means indecision. I have explained many times. When doji is formed, one doji is formed, indecision. That means I have told many times, the moment they means the marketplace decide to move in a particular direction, the move will be forceful and ferocious. But two dojis means it's even more forceful and ferocious. Hence, it's definitely a cause for concern, and particularly with election exit poll result coming on Monday and the actual result coming on Tuesday, probably Tuesday around 12:01, the picture will be very clear. So accordingly, the market movement will be there. My suggestion is that people should stay away and just wait for the event to be over. Whatever it happens, see, that is political party to decide who people have elected, people have voted. The last phase is going to go for voting. People know whom they have voted for, and the results everybody will know who the majority of people have voted for. And the majority, the party that is winning the majority mandate is going to form the government. Whoever forms the government, that is for political parties and politicians and psephologists to do whatever they want to do. As far as we are traders and marketplace are concerned, my suggestion for traders is that play safe or just stay away. That will be the best bet. As far as investor is concerned, if you have waited for so long, wait for another few days, things will settle down, and you can always enter the good quality stocks at any price you want, which is a good thing, right? Because you would have determined a price to buy for good quality stocks. It's not going to run away. Okay, that's what it is. Though, hence, with that background, let's go into the analysis part of it. On the banking side, Canara Bank, Indus Bank, Yes Bank, AU Bank fell 1%, Bandhan Bank fell 3%. I have told many times, Bandhan Bank, whenever any rise happens, the rise is happening to fall big. That's what it is. So hence, one has to be careful. I have told multiple times. Axis Bank and ICICI Bank jumped up by 1%. HDFC and other banks remained sideways. That's why you had a good up move. In fact, HDFC Bank beautifully supported all the indices today. On the financial, Cholamandalam Finance, Manappuram, LIC Housing Finance, M&M Finance 1% down, Bajaj Finserv, Bajaj Finance, L&T Finance, Shriram Finance 3% down, Muthoot 4% down, others remain sideways. Nothing moved up. So which explains very clearly why Nifty underperformed Bank Nifty, though both more or less formed some kind of reversal candle, I would say. On the insurance, ICICI General and Pru 1% down, SBI Life and HDFC Life 2% down. So insurance companies are being severely hammered every day, and in fact HDFC Life is looking pathetic. On the oil and telecommunication, so Reliance 1% down, while Bharti remains sideways. IT, Apple, Birlasoft, HCL Tech, Infi 1% down, LTIM, LTTS, Mphasis and TSES 2% down, Techam, Wipro and Kofo 3% down. Intellect was the sole winner. I wouldn't call a winner. It remains sideways. On the consumer goods, DMart, Hindustan Lever, Pidilite 1% down, ABFRL, ITC, Colpal, PVR 2% down, Titan, Nestle and Berger Paints 3% down, Page Industries 4% up. On the automobiles, Ashok Leyland 1% down, Bajaj Auto, M&M, Bharat Forge, Maruti, TVS all down 1%, Tata Motors and MRF 2% down, Motherson 3% up. On the metals, Coal India, Hindalco, Jindal 1% down, JSW and MGL 2% down, National Aluminium, NMDC, SAIL and Vedanta 3% down, Tata Steel 6% down. Health and Pharma, Divi, Sun Pharma, Lalpath 1% down, Cipla, Apollo Hospital, Dr. Reddy and Metropolis 2% down, Thyrocare 1% up. On the others, Delta Corp and Godrej Properties, Indigo Paints, Zomato, Ultratech 1% down, Jubilant Food, IRCTC, Havels, IndiaMart, DLF, Adani Enterprise, Adani Ports 2% down, MCX, Apollo Hospitals 4% down, APL Apollo 4% down, not Apollo Hospitals, Z Telefilms 1% up, Indigo 5% up. So overall, the market is, as I said, like if you see, I read out all the sectors. Most of the sectors, there is hardly few stocks that went up, which is why Nifty severely underperformed the other indices. The banking stocks relatively did perform well, which is why you saw some good up move in the banking stock. But this up move can be a false up move also. Hence, one has to be extremely careful. Anybody who wants to enter trade, particularly these last 2 days, just be cautious. That's all I can say. Thank you very much.